Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Fold Holdings, and let me tell you, this one has more twists and turns than a crypto wallet trying to explain itself to your grandma. It's an amendment, meaning they're fixing something they already filed. Fold Holdings Inc. is making a correction to a previous report they filed on February 14th. They're adding some important financial statements from a company they acquired, Fold Inc. We're getting a peek at Legacy Fold's books for 2024 and 2023. It's like finding the missing piece of a financial puzzle. The main reason for this amended filing is to include the audited, meaning professionally checked, financial statements of Legacy Fold. These are for the years 2024 and 2023. Think of it as getting a second opinion on your company's health, but from an accountant. These statements are like a detailed report card showing how well Legacy Fold performed financially, along with the financial statements that also including what's called management's discussion and analysis. This is where the people in charge, the managers, explain the numbers. They talk about why the company did well or didn't do so well. They talk about what they see happening with money and how the business is doing. It's like getting the inside scoop straight from the top. This section gives context to the cold, hard numbers, explaining the story behind the financials. And okay, now let's get into the financial statements themselves. These are in an exhibit. Scroll Legacy Fold's consolidated balance sheets. Think of the balance sheet as a snapshot of what a company owns and what it owes at a specific point in time. It's like a financial photograph. First up, let's look at cash and cash equivalents. In 2024, Legacy Fold had about $4.1 million in cash. That's down from roughly $6.5 million the year before. A drop like this could mean they're spending more money than they're bringing in. It's like having less money in your wallet this year compared to last year. Total assets, which is everything the company owns, went from about $17.8 million to roughly $13.2 million. Seeing a drop like this is a red flag. It means something happened to make them worth less, like selling off equipment or losing value on investments. Or even now, let's switch over to what Legacy Fold owes. Accounts payable and accrued expenses went from roughly $1,860,000. This decrease means they've been paying their bills faster. This is generally a good sign, like paying off your credit card debt. Total liabilities, what the company owes, decreased from roughly $5.8 million to around $2 . This means they've paid off some debt, which is a positive. It's like lowering your mortgage. Finally, total stockholders' equity, which is the value of the company owned by the shareholders, decreased from around $12 million to about $10.6 million. This could be a sign of the company not performing well. If the shareholders' portion is shrinking, there might be trouble catching $6 million. Scroll Legacy Fold, consolidated statements of operations. Scroll the income statement, also known as the profit and loss statement, shows how much money a company made or lost over a specific period. Total revenues, the money they brought in, went from approximately $7.77 million in 2023 to roughly $721 million in 2024. This is a decrease, meaning they sold less or charged less. It's like a store making less money this year compared to last year. Cost of revenues, the direct cost of making those sales, stayed pretty consistent at around $1.2 million. This means that they are consistent in their product prices and costs, which is good. Gross profit, which is revenue minus the cost of revenue, went from roughly $6.5 million since the cost of revenue was about the same, but revenue decreased. This means they are making less money since sales decreased. Sales and marketing expenses increased from around $2.8 million to about $3-4 million. They spent more on sales and marketing, but they made less. It's like spending more on advertising, but seeing fewer customers. General and administrative expenses went down from roughly $4.9 million to around $4 million. They are spending less on overhead costs, which is a positive, but it wasn't enough to offset that sales decrease. Total operating expenses decreased from around $8.1 million to roughly $7.4 million. They are spending less overall, which is a positive, but not enough to offset the lack of sales. Loss from operations, which is the money they lost from the business, decreased from roughly $1.6 million to approximately $1.5 million. They are still losing money overall, but the company is making progress. Finally, net loss decreased from approximately $1.7 million to around $1.6 million. Even though they are losing money, they are reducing their loss. Scroll Legacy Fold consolidated statements of cash flow scroll. Let's move on to the cash flow statements. This statement tracks the movement of cash both into and out of a company. Net cash used in operating activities decreased from roughly $2.2 million to about $1.6 million. Net cash used in investing activities increased slightly from around $170,000. This means they're putting a little more money into things like equipment or new projects. It's like spending money to improve your business. Net cash provided by financing activities changed from about $233 million to about $900,000. This means the company is pulling in money from things like loans or selling stock. The fact that this decreased, but they were still able to reduce their losses, is a good sign. Together, we're seeing a company that's acquired another company. The financial statements are showing that there is still a lot of work to be done for the company to be profitable. Their total assets decreased, even though they still had an increase in their cash flow, largely due to financing. So, what's my take? Fold Holdings clearly has some hurdles to overcome. While they have reduced losses and have financing to cover the difference, sales are still down and it is concerning. They need to increase their revenues or the company may not be successful. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and definitely subscribe for more deep dives into the world of corporate filings.